the way we're going to proceed is a bit different than what I said before, right? So each chair will be handed the mic and be given, 3-4 minutes to just wrap down what are those challenges and actionable solutions, okay? And please remember, because we really need to follow up on this, we're not going to have these gems, on the wayside. You're fertilizing the development of the project development community. So please remember to put your name, email, and phone number. We're going to start. Now, where's Alex? Nick? I need you up here. 2 minutes? Okay, 2 minutes, guys, and then we start. Thank you. Okay, guys, 2 minutes up. Natalie is in charge, and she's going to start. Alex, we need you. Natalie is going to start at table 6. You have the option of either using a mic and speaking from your table or coming up here, whatever. But let's start with, and please introduce yourself. Please, thank you.
5 minutes.
No, 5 minutes. Guys.
Okay, are you guys ready? All right. 2 minutes.
2, 5. Okay. The train has left the track, so we're starting with the next table. So you're going to come up here, or you want to do it there? Okay. Let's go. Thank you.
Good afternoon, everyone. My name is Adam Tricky. I'm here representing a company called Mainstream Renewable Power. We've had a discussion on these 3 points, and in a nutshell, the 3 things that we see as recommendations that should be tabled, not necessarily new, have come up in the first 2 table delegations that we've heard this morning. The first one, as a recommendation to government, locally we have been spoiled with the RFP that the DOE has and how transparent it is in terms of timelines, etc., and very little can be pointed to as being completely inconsistent with it. So basically, when we travel through Africa looking for projects and trying to come up with the next big deals on the continent, the things that we find we could use help from government is a little bit more consistency with their procurement programs, a little bit more color to what they want to achieve and to actually stick with it while we enter into those projects. What we find is projects that are constantly changing the goalposts become very frustrating, and you kind of start losing interest in them. So consistency is the first one. The second recommendation to development partners, when entering new markets where you do not hold an office and do not know the culture of the country and the people, one thing we recommend from developers that have been there for a considerable amount of time is to take us on a path of what the communities are like, their awareness, what they have been promised, and what the project will mean in their lives. to try and understand the impact on them. So I suppose this does kind of equate to the open book principle, but with actual people whose lives you will have an effect on. And then lastly, the third recommendation to Adam. No, basically, when we go into a new country to look, as a project developer, and we find a project that is looking to partner,
Yeah.
we would like to know more about the communities that we're getting
Okay.
involved with, so
Okay,
that we
great.
don't misread the project and create issues down the road, which has happened to a number of projects on the continent. And lastly, the third recommendation to the private sector operators is to view the project in the life cycle and to communicate throughout the development process, the closing process, construction and operations, is to take people that live near it, to talk to the locals, to talk to the governments, and to make sure that people are updated as to how the project is evolving. This is just to make sure that the projects deliver what they said they were going to, and this is also useful for anyone coming with future infrastructure projects, so they can learn from any of the problems or any of the positive things that have happened through the project. Thank you.
That's terrific. You can think of a lot of very concrete follow-on tasks. I wonder, Adam, with your first recommendation, whether developing templates might be helpful, in terms of the responsibility and having them public, so that consistency is really, you're sort of in the sunlight, and variances, there's less room for corruption, less room for sloppiness or politicalization. Is that what you're thinking? Yeah. Yeah. Any comments or questions for Adam? Okay. Should we go to the next table? Thank you.
Okay, well, I think that's us. My name is Nicholas Oliver. I'm the head of business development at NMS. We're a project developer and an EPC contractor. We have on our table here a combination of government, funding, local entrepreneurs from sub-Saharan Africa. And I think there's going to be a bit of a theme running through this, because I think we're along the very same lines as table 5 there. So on the first recommendation, I think we would say creating confidence for the investors coming into a country, having a one-stop shop for regulations, so that they can come into a country, they instantly know the rules, it's all nicely printed out, etc., etc. And I give an example of Côte d'Ivoire for that, who have got their systems for the arrival of investors and contractors absolutely off pat. For the second recommendation to development partners, we've looked at the DFIs, and we would say that trying to create a platform where the DFIs would work more closely with industry to develop sustainable development projects, rather than industry do their own thing on one side, the DFIs do their own thing on the other side, and neither they meet. So partnership with industry on direct negotiations to create a platform to produce sustainable funding into infrastructure. And for the third recommendation is to private sector operators, we would say we need more operators, we need more contractors coming into Africa, into sub-Saharan Africa and the wider Africa, who actually understand what they're doing within Africa, and therefore spending the time and the effort to get to know their customers, to get to know their countries, to get to know their stakeholders in the various different markets, and in a collaborative venture. And I think that's very difficult for a lot of companies. You have the bigger ones who have shareholders who are chasing them for results, and you have the smaller ones, the SMEs, who don't have the money to do it. interesting comments coming from the panels beforehand in allowing and helping SMEs to do that process. But I think that that one is get out there, get into the markets, and get to know your customer.
Does anybody have a comment on that? I mean, to me, the third point is really compelling. Increasing the number, we've heard it time and time again in the prior sessions, of real developers who can go out there and do the job. So I guess my question for you and for all of us is, what is the specific process to do that? You know, if we look at the incredible skill set that's required to develop a project, whether it be knowledge of SPVs and project finance lawyers, or environmental engineers, all the people, or understanding the smaller deals and the alternative structures that need to be put together. How do you create a greater pipeline of the developers to develop the pipeline of projects?
I think from UK's point of view, that falls very definitely onto UKTI, the United Kingdom Trade and Industry, the UKTI forum, to get out into British industry and tell them what they have to do, to teach them what they have to do, to give advice. But it does go back to the one area where the majority of the work is going on, and that is with SMEs and the cost of actually creating those projects in the first place. And I think that the development funds to allow SMEs to go out there and be able to afford to do it, that's one of the main areas that we have to look at. And to remove the perception that Africa is impossible to trade with.
Any other comments? Also from my colleagues here? Comments on that? Okay. Well, thank you very much. We'll move to the next table, please.
Hi everyone, my name is Lindokuhle Zungu. I'm a managing director of AH2 Engineers. We are
Can you please put the mic closer?
I'm a managing director of AH2 Engineers, a multidisciplinary consulting engineering firm based here in South Africa. The recommendations to the government, judging from what was being said earlier on, it becomes clear that the parastatals and previous, the people who have been running the previous utilities tend to hog onto those entities. And it becomes a bit difficult for private investors to come in and put money in those, into running, operating and maintaining those facilities. So we are saying the government should look at legislations and regulations to try and open up those institutions, allow for private sector investment, basically to privatize, where possible, privatize the infrastructure, be it toll roads, be it independent power producers and similar schemes. The second one, we're looking at government trying to ensure that the environment, the operational environment, be it political, stability, be it dealing with corruption, being seen to deal effectively with corruption, be it investor codes, and things like that. We're encouraging the government to work on those, to give the comfort to investors that they are putting their money in safe environments. The third one is obviously the actual competitiveness of the environment, clarity on procurement processes, like the previous speakers have been talking about, the open book and things like that. The recommendations to development partners, we we're kind of taken aback to hear that if you are an emerging developer, you don't have a track record. It's not really clear.
I'm sorry, can you repeat that? I didn't get it.
If you are an emerging developer with no track record, it's not even clear when you say a track record, how many projects or how many years you're talking about, that some of the financiers are not prepared to look at you. We're finding that it's not very helpful. We think the financiers should be flexible and also be innovative in their approach to when assessing credit applications from various players. And then when it comes to private sector, we are aware that the government, especially the bureaucrats, are generally faced with a situation where they have to answer for decisions that they did not really generate. They take recommendations from consultants, and now they have to own those recommendations as though it was theirs. So there's always that feeling of unease on the side of the bureaucrats or the government employees. So we're basically saying consultants should do what they are supposed to do and not, just provide consultancy and not try and force certain recommendations onto bureaucrats and then step back and then they shouldn't actually take decisions. They should just be consultants and provide recommendations, and that's it. Obviously, that is now looking at giving space to the bureaucrats to look at various options and then own up to the decisions. And then lastly, there are again those serious concerns from the government side that developers are there to make money and then run away to sunset, run off to sunset. Whilst that is, we understand that this business is about making money, but the issue of transparency in terms of pricing, the private sector should entertain questions and be transparent when it comes to tariffs and stuff like that. Thank you very much.
Any questions, comments? I mean, to me, this points to the overall theme here. We need to have greater definition of roles and accountabilities and how it all works together with transparency. And the vested interest issues we know are quite real. One of the points that may be relevant is having the metrics. Everybody in the global forums are saying blended finance, but when you refer to the utilities, I would imagine those are mainly grant funded. And so if you start to say, listen, you've got to be able to be bankable, that changes the landscape. So any other comments on that? Okay, thank you very much. The next table.
Hi, I'm Marcel Brüwedler from the IFC Infrastructure Investment Team in Joburg. We had an interesting discussion at our table with many experienced developers. So our recommendation to governments, if I had to pick one of the many we discussed, is that they should get it right from the start. So they shouldn't shy away from hiring the people who know how it's being done from the start. Costs a bit of money, but they're good examples of governments who got it right. First and foremost, South Africans with their renewable energy program. So other governments can learn from this, get it right from the start. our recommendation to development partners. So development partners for us is the DFI world, the public sector support for private power, etc. Again, many recommendations from the private sector partners on my table, but I'll pick one other than that we have to be much faster. Obviously, the interesting one I think to note is that we should all think more about alternatives to project finance models. Well, that's not an easy question, but I think it's worthwhile noting that. Last but not least, a recommendation to private sector operators. So I think it's the theme of people being conscious on the various pitfalls when they pick partners. So this is the local developer who has originated the project, who needs to find money. It's the consortium who wants some government involvement in the process. It's the consortium who is about to tender EPC or appoint EPC. Be conscious of the pitfalls. Be conscious of conflicts of interests or potential conflicts of interests. Be conscious about the sensitivities around politically exposed people, and essentially of the fact that there are no shortcuts. Things do take time, and in most instances more complicated than they seem. So don't go for the shortcut. And eventually keep in mind also that what lenders are going to tell you when it comes to financial close is that famous skin in the game thing. You know, that lenders want the anchors or the technical partners of a project to stay in and not have a fast ticket out. Thank you.
Comments? I just have to push you a bit on the project finance point. I mean, we all understand the when we're looking to finance, whether it be from banks or whether it be from institutional investors or the like, the default rates, as shown by the Moody's studies, have shown, especially where you need to control for volatile markets and swings and the like, why project finance, despite its complexity, has prevailed worldwide. Are there particular models you have in mind that are going to be acceptable, both on the debt and equity side?
Well, as you mentioned, the great advantage of project finance is that it's really a very disciplining tool. And so many people look at it and, you know, no risks gets forgotten about. But sometimes I must tell you, also me, I mean, if I think about the money and the time which goes into these structures and, you know, the poor sponsors having to come up with all the conceivable risks the tortured minds of the bankers and lenders can come up with, I wonder whether this is really the only model for the future. And so if I had one thought, it's more, let's look or be more creative in looking at the concept of platforms. So move the leverage one step up or one level up. So this concept lends itself to smaller projects which cannot be project financed on their own, so they need portfolio approaches. But maybe in the future it lends itself also to larger projects where you have an experienced platform sponsor who has a track record, who has done things, who, you know, will find or can find financing at holding level, because people trust that he has gotten it right at project level. So we're not there yet, but maybe in the future this might be an option.
Okay, great, thank you. Okay, we got to move along here. It's so tempting to speak for so long on each issue. Can we go to the next table? Nicholas, you get to perform. Not allowed.
So Cable was quite diverse in its composition. We had civil engineers, supranational, government, and private sector participants. To summarize the consensus findings we had, first, when it comes to government, there was that expectation that there needs to be more established internal agreement within, government at national, regional, municipal level on what are really the high priority projects, because very often there is no consensus within government, and that can be the reason why many projects actually never take off, or there are infightings between various ministries, and of course for other stakeholders that is an issue. Another issue, which was more transparency at all stages of the process, and there was an interesting example. For example, here in South Africa, within the South African Treasury, I think there is a department called the PPP Center or PPP Division, and sometimes when they do things the ideal way, and when other, I guess, government bodies allow them to operate efficiently, the existence of a centralized body which can be located within Treasury or within the Ministry of Construction, or within the President's office. It doesn't matter where the PPP Center is lodged, but what's important is for that center, that one-stop shop, to have real influence over time. When all these lights are green and aligned, things can move very nicely. And a good example was 9 years ago. I think when here they were working on the Gautrain project, which proved to be a fairly successful landmark infrastructure project. I think that what was said is that PPP Center and the Treasury Department played a very leading role throughout the life cycle of the Gautrain project, and other stakeholders from the private sector, from amongst development partners, were very happy. It's not always the case, but it's an ideal, I guess, good example or positive example. Moving now to development partners, I think what people said on our table is that there was a need for more transparency and an open book approach, and also a need to have the incorporation of a long, holistic life cycle ethos, because sometimes, people have a tendency to segment or break up pieces of the life cycle, and what was needed is a more really long-term, I guess, engagement from A to Z across the life cycle of the infrastructure project. Also, regarding the development partners, be they national, regional, or supranational, there was a need for commitment to ESG, environmental, sustainable, and governance objective, including maybe the existence of, sustainability dashboards or metrics, because very often, people speak about, sustainability or green infrastructure, but without some precise, hard metrics, and the same can be said about the social usefulness of some particular projects. Now, moving on to the last part, which is the private sector component, there was a need to really have performance-based KPIs, so that came as a consensus element, and also a comment was made by a lady, I think it was Kim, who's now a consultant, but in a previous life she worked as a government expert, and she also worked for construction and development companies. So she really had, over her career, the whole gamut of roles across all the stages and across all stakeholders of infrastructure projects in South Africa. And Kim made a very interesting remark in terms of, defining concepts and putting things into narrow categories. And she said, there are tons of projects that don't necessarily qualify as PPPs, strictly speaking, right? But that still require private sector expertise, help from development banks, lenders, co-investors, and that can learn a lot from PPP models, even if themselves they don't qualify as PPPs. And that was mostly what was said at our table.
Any comments, elaboration? Does Kim want to? She left?
She left, yeah.
She left. Okay. I think this point is really pivotal because we've seen infrastructure around the world. There are many different ownership models, including 100% public sector, EPM, in Medellin, okay, which has incredible success versus like Sabespe in Sao Paulo, you know, and listing not only in local stock exchanges, as we've talked about, but foreign. So, you know, the idea of how we really create an architecture to optimize and not get stuck in the PPP units and the bureaucracy is something maybe this process, can talk about. Okay, so I guess we go to the next. Thank you.
Hi, Anton Louis Olivier, Renewable Energy Holdings. I missed the entire non-existent group discussion around our table and was handed the microphone when I came back in. But since I've got it, I'll just share a brief thought, and it's a recommendation for all three parties, government, development, and private sector, is that what I have seen is that in many other countries, there tends to be a focus on large flagship projects, big projects. They need to be big to overcome all the transaction costs because they knew there's not much precedent in these countries for projects. And these big projects tend to dominate the debate, monopolize resources. And I think an alternative approach could be to facilitate more smaller scale projects which are not that big, that doesn't upset the national liquidity balances, that doesn't upset the power balances in the energy sector, which we know. But by being there, smaller projects can still bring about change in the power sector and the efficiency, and thus lower transaction costs, which will then enable more projects to proceed, and even some of the larger ones also then to become easier. I think a clear example of this is now with some solar projects being driven by large international developers, very often backed by international utilities. You get a small project in a country that's tens of megawatts, but it introduces a big new player into the market, which is the first time a counterpart and a resource counterpart to the national utilities and national governments. And I think that is a powerful drive to a change in the sector, which will enable more projects to proceed later on. Then just one comment in terms of this recurring theme that we need to come up with an alternative to project finance. The time that I've been in this business and looking at project finance, about 10 years, I've heard it a couple of times mentioned. It's a recurring theme, and however you shake the cards, at the end of the day, you end up with project finance again. In talking about platforms, it just means that investors are moving their focus to another party who's got to take care of the project finance risk. And it is real, and it is a big burden to carry. And it would be great if we can have construction facilities or pure equity deals. But I think it's going to be a long time before all the financial players can actually structure deals to make that work. In South Africa, we're arguably the most sophisticated financial market on this continent, one of the few where we can borrow in our own currency. We're still seeing project finance deals. What we're seeing is refinancing, pension funds coming up via listed entities post-COD. But not one project has been financed, not on a project finance basis.
Yeah. I mean, that in itself is like such a period of debate. And, you know, it's interesting when we talk about the smaller projects in South Africa has been a place where pooled finance has been applied. And one of the issues, in fact, a Colombian bond issue, actually in water and sanitation, fell apart because there wasn't the discipline. Well, one of the reasons, there wasn't the discipline at the individual project level. So I think, you know, one of the key challenges is how can you guys in the project development community, working with your partners, really build in those processes and force yourself to be cost effective. But it is true, project finance is the mainstream tool. Thank you. Comments? Okay, next table, please.
Mr. Owino.
You finally.
Thank you, Barbara. We had a very lively discussion in our table, a lot of heavyweight big hitters. We had a big pension fund from this country, a very big pension fund from Asia, and a large commercial bank. I mean, all the big boys were there. So the first point that came out was legislation, that clearly we need to have clear enforcement of contracts. And when we unpacked, the group unpacked legislation further, it basically boiled down to two things. You need legal certainty, but you also need policy certainty. Apparently, legal certainty is good. I know what the law is. I know what I'll get under this. But sometimes the policy changes. So as soon as an investor comes in, they want both legal certainty and also policy certainty. Within that bit, there was a lot of discussion about resolving disputes when they arise. Now, you know, in this country, there are a very strong arbitration network. In the rest of Africa, it's not very strong. I mentioned to them that in one of my visits to Qatar, they had a very nice policy innovation where two parties to a contract can actually choose a jurisdiction if there's a dispute that arises. It's like an opt-in jurisdiction. So if, say, an SA counterparty and a, say, Kenyan partner disagree, they can all opt in to a third jurisdiction to resolve the dispute. So that was a very good innovation. And in terms of rules, they wanted very clear rules on arbitration. I believe also this market has clear rules. We may not have the same clear rules. And when an arbitral award is given, it has to be enforceable. So again, enforceability of contracts comes in. The policy certainty was more in the regulations and the rules. The policy should not change. For instance, there was a very good example of Zambia, where halfway through, say, an investment, mining taxes jumped from, say, 20% to, say, 50%. And there was a very strong example of where 20 years ago, Zambia and Chile were at exactly the same spot within copper and mining. And 20 years later, now Chile is like almost 20 times bigger than Zambia. So policy certainty is required from the government. I want to mention one slight point the group made about government champions. A champion is essential, but a champion is also dangerous because they may have vested interests. We have seen where the champion may hold out his hand and it needs to be paid. And if you don't deliver to that hand, then the champion can actually now harm the project. So basically that is for government. Look at the legislation, have legal certainty, have policy certainty. And if there are disputes, have a framework for resolving the disputes. For the DFIs, I picked two recommendations that were on opposite sides of the spectrum. One of them is DFIs need to get out of the way sometimes. I think many DFIs are actually blocking development. We do have one, am I on? We do have one where in Lake Turkana, there was a very big investor from this market and a very big DFI from this market. And the DFI from this market insisted on having an external guarantee for the project to proceed. You can imagine from the same country, one party saying, I want to invest, the other party saying, no, I need an external guarantee outside the continent for this to go through. So that was really like DFIs need to be aligned to what they want to do, and where necessary, they should actually clarify their mandates, clarify what they need, what they want, and ultimately, they must facilitate the project. Out of that discussion came in a recommendation that Africa needs to have its own guarantee fund. I know we do have an Africa guarantee fund. Maybe it's not big enough. We may need one of the scale that can do Lake Turkana, 300 megawatts, or can support our LAPSET in Kenya, which is $25 billion, or do a Grand Inga Dam, possibly $30 billion. So for that guarantee, we don't need to go to Washington or Beijing or Europe. There should be an Africa guarantee fund that can actually support that kind of investment. For the private sector, I picked a very strong point. It's the old adage, not location, 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 but transparency, transparency, transparency. Private sector players must be transparent. They must be able to subject themselves to the same requirements as the DFIs. We need a track record. We may need a rating, a fiduciary rating. You must be open if you're listed as good. We have your financials and your corporate governance, but transparency with the private players. I believe this is more for the funds, like the state-owned funds. They have to account to, A, the bosses, but also taxpayers, why they chose this particular private operator. I gave the team an example where one of our biggest projects in the country basically fell apart in the World Bank for some unknown reason, for some unknown obscure reason. Suddenly discovered that the contractor had a shareholder from, I think, an Eastern European country who had links to an oligarch in Russia. Now, if you tell a Kenyan, what does an Eastern European shareholder who is linked to an oligarch have to do with building this road? So DFIs can actually block things when they impose those kind of requirements. And I think the team also had a good discussion, if I can just add into Barbara for this. They talked about risks, where government should actually take over some risks from the private sector. For instance, government can set up teams. Teams can be multi-agency, multidisciplinary. They help to kind of reduce some risks. And government should also do its job. They were saying there's some things where investors do not want to invest in, like social programs, things that government should actually be doing. I'd like to end on one area which was quite good, conflict of interests. That should be addressed as well. So the team had a very lively discussion, very big funds represented. Barbara, that's it?
Yeah, I think you're going to have to write all that up for Hubert.
They're still there, they're still there.
But I couldn't help but think when you were talking about the issues of enforceability
Of contracts, yes.
contracts, whether the IFC would like to work with its doing business report to have a new report on the enabling environment for project development.
Yes, and Barbara, let me just clarify.
Yeah.
It's sometimes not the ability to enforce a contract.
Yeah.
It's when you've got an award, for instance, like this state agency must do the following or pay you this amount. Now, as an investor, you can't enforce that ruling. It could be on, say, ESCOM equivalent. Can you maybe seize assets? Can you
Okay,
lock
but
them up?
there we could ask for synergy, for example, between the various arms of the World Bank Group as to
Yes.
how, and also since the World Bank funds ATI, your
Yes.
point on growing ATI and building the secondary insurance market.
Yes.
So ATI, because you look at trying to do a deal, what's more effective, working with MEG or ATI? A lot of government agencies, including US ECAs, would say, I'll bet on ATI because of the shareholder structure. So, being innovative and open about how we can all work
Yes.
together to get at those goals. So we got to move, but really,
The other good thing about
Yeah.
the guarantee fund, I think in terms of scale,
Yeah.
ATI is great, it works,
Yeah.
but scale.
Yeah,
It needs to
we
be
need-
very,
yeah.
very big.
Yeah. Thank you. Okay, where are we? How many tables do we have left? All the, okay, Hubert? Not that. Okay, so can we just try and be concise, because other words we're going to be in big trouble. Is that okay? Okay.
Hi, Deepak Chiba from the IDC. We haven't actually elected a chairperson, but
I can't hear
so I'll just quickly go to the points that we've raised. On government, I think we are spoiled by the REAP program, so what is clarity and the way the program works in South Africa. And I think we'd like similar sort of programs in South Africa, similar to the REAP program. What we'd also like to see is a clear framework, as I have discussed that, and a regulation and environmental to be clear. So red tapes between different departments such as environment and wherever it's issuing out, maybe say a tender, should be coordinated and should be easily approached and easily clarified if there's any issues that comes along. yeah, we just consistency and coordination should be clearly defined. Right. And then from the DFI side, what we'd like to see is maybe partnership with the private sector in early stage, so we understand our roles and responsibilities, and we understand when we clarify what our roles and what our responsibilities and also what our expectations are. I think also some of the DFIs, we do take a lot of time, so I think quick decision making and maybe some of the points that you've raised is maybe more experienced teams sometimes from a DFI point of view. From a private sector point of view, as a DFI, I think one of our mandates is skills transfer and promotion of local production. So I think that's a communication, and that's a challenge that we have a lot with the private sector in trying to communicate that to our co-funders, is the importance of the local development and the local skills transfers and local productions to take place. We've also made a point that maybe private sector should be a bit more patient with for example, DFIs and government, because there are red tapes and other bureaucracies that have to be followed, but that's clearly a mandate from the DFI's point of view. And yeah, that's essentially.
Thank you very much. We're going to go quickly. Next table. So Mark,
Sorry. Yeah.
you're on.
So I'm sorry. So we're gonna. A lot have been said, so we're gonna do very quickly. It was more a networking than a walking lunch, but quickly, what was said, I think, on the government side, that maybe something that was not said before, is the difficulty with the tax environment. Very often, we find ourselves negotiating this fiscal annex or trying to find. We are the first one to test the tax environment, and we figure out when the container come at the port that there is an issue with how to clear the custom and implement our zero VAT or reversing VAT or whatever. So the tax from government, really the tax framework around large infrastructure projects to be firmed. And the second thing, of course, is the structure of the negotiation and process during development to build our risk with our costs. So feasibility study, interconnection study, tariff negotiation, tax incentive, PPA, etc. So to have a firm and clear process, and as we progress, we spend cash, we put effort, but we know that we are achieving milestones. So I think that was the two main things. The rest remaining was said. Having a good focal point at the government level and have a clear view of priority project. I think these are the main thing for the government. To development partner, I'd say that, and maybe it's the same for private sector operators, two things. One, speed is of essence, and to go fast, we need to go in parallel. So we cannot ask each time the lender has to have the full package before starting to work, etc. People, government, lenders, EPC, O&M, all these players, we need at some point to work a bit in parallel. If we do a sequencing process, we are still in this 5-6 years process. So if we want to speed up, we have to go in parallel. And last thing is, again, this project development standard. How can we come with something that is accepted so we can progress fast? Thank you.
Thank you, Mark. Who's next? We got, and I am told that, please, 1 minute. Sorry, you guys, but maybe we can follow up, but 1 minute, okay?
Good. My name is Jacques Brenenkamp. I'm from Beacon Africa. I think a lot of things that we've said has already been said, so I'm going to keep it short. First of all, from a government point of view, I think our team felt that you should stick with your calling, which means that government should enable business, not be part of business. They should give training, capacity building, appoint panel of transactional advisors, templates, make sure of consistency and continuity, so that business can happen instead of being part of that. Then in terms of the development partners, I think there we said again, development partners should stay out of politics, leave that to government, look at the way that business can be done quite quickly, hunt as a pack, not necessarily as an individual outfit, look at towards the renewable energy program, take lessons learned from that and make sure that you duplicate it. And then from a private sector point of view, what we basically said is that the local knows best. Get the right people involved, make sure that you know who the right stakeholders are, because we believe that the right stakeholders are quite important for successful project execution.
Thank you, Jacques. Next.
Hi there, my name is Michael Miller. I'm with Africa Integras. A lot of these points have already been mentioned before. On the government side, we thought it would be important for countries to initiate formal PPP units. I know a lot of countries already have these. Some are in process. We thought it would be important to have a single leader of this PPP unit who could dictate process and really drive projects to the finish line. As far as development partners, I know the term platform has been used several times. We thought if we could formalize the local investment community to fund the platform, both pre-development as well as after post-development. And in terms of private sector operators, certainly finding the operators that know the market best, as has been said many times, but also holding those operators to international best practice to raise the entire level across the country.
Thank you very much. Next.
Hi, I'm Vibhuti Jain from Power Africa. Again, a lot of our points have already been made, so I'll go through these very quickly. So on the government side, we suggested setting up transparent regulatory and legal frameworks, including for ownership rights. We also, our second suggestion was having an integrated infrastructure development plan and having state ownership over that plan. So essentially having coordination among the various infrastructure sectors, whether it's energy, transportation, urban planning, and also within and across a country. And our third point was having good medium and long-term planning and having appropriate resource allocation to match that planning. On the development partner side, our first point was, and recognizing that there's different categories of development partners, whether they're DFIs or ECAs or donors, but really emphasizing that development partners on a whole should be using their resources to crowd in commercial participation rather than crowd it out. So looking at how they can most effectively use their resources. Second, increased coordination among the development sector. There's so often different agencies who are trying to, or different organizations that are trying to achieve the same goals, and rather than working together, they're trying to start from scratch and have their own plans. And our third suggestion was adopting a modular approach to development, meaning similar to the comments that Sujoy made in the beginning of this this forum on using programs like Scaling Solar that are replicable and scalable. Rather than focusing on a one-off project, we should really be looking at how to institute a program for developing a project pipeline. And then our recommendations to the private sector were to price risk based on actual risk rather than perceived risk. Our second was to obtain an appropriate advisory team early on in the project's development. And finally, our third point was really thinking about putting together all the components of a deal to ensure that deal is bankable. We had a discussion at our table around how so often people talk about doing feasibility studies, but there isn't an emphasis on incorporating that element of bankability in that feasibility study.
Really interesting. So, are we finished? We're finished. And I guess our sponsor table gets left off the hook. Hubert, any comments? So, guys, I mean...
Doing business in Africa. You can't afford to be without Africa Investor.
And I think, Hubert, you have a huge burden in putting